Hello and welcome to the Business Standard Morning Show. I'm Swapnil Joglekar. It is the 11th of September 2023 and here are the questions we'll be answering today.
Will oil be the next big worry for India? Why are Indian celebs not banking on their own name? How will markets react to inflation data this week? And what is India's G20 millets initiative, MAHARISHI?
The decision of Saudi Arabia and Russia to extend voluntary oil production cuts through the end of this year pushed the crude prices close to $90 a barrel. For India, it comes at a time when prices of food items are on fire and monsoon rains are evasive. So will rising crude oil prices add to the woes of India? Abhijit Kumar and Sanket Kaul dig in for the answer.
Food prices, especially that of tomatoes, painted the inflation red in July. It touched a 15-month high figure of 7.44%. While most experts agree that the August figure will offer some relief, they agree that it will still be higher than 6%. As the inflation figures were made public, all attention turned towards the central bank, the RBI. Its Governor Shaktikanta Das reassured people on September 6 that RBI is firmly focused on bringing down inflation to 4%. But a development on foreign shores may make Governor Das's task a bit more challenging. It may also pose a challenge to the government's fiscal maths. In coordinated statements, Russia and Saudi Arabia announced to extend their cuts in oil supplies through the rest of 2023. It gave a push to already rising crude prices, which settled above $90 a barrel for the first time this year. Crude prices have risen more than 20% since mid-June. The recent move has ignited fears of a global oil supply shortage, as these reductions come on top of the oil export cut agreed by several OPEC Plus producers in April this year, till the end of 2024. India primarily imports from OPEC countries. The crude oil free on board or FOB price for the Indian basket has been on a steady rise for the last 2 months. The average crude price for India increased from $80.37 per barrel in July 2023 to $86.43 per barrel in August 2023. The latest prices for September 2023 have been pegged at $89.81 per barrel by the Petroleum Planning and Analysis Cell of the Government of India. So is oil going to be the next big worry for India?
The economy is growing at over 7%, which needs a lot of oil and gas to meet the growing needs of the economy. And on the other hand, domestic production is falling. So you're left with a situation where you have to import. At the moment, we import around 4.5 million barrels a day. So roughly about 130 million barrels a month. That would be about 1.5 billion barrels a year. If oil prices go up by even $1, so that means that every month you end up paying $130 million more. And over a year, it comes to over $1.5 billion. This is just for a $1 difference in oil prices. And that exactly is India's biggest worry.
But some experts differ.
Short-term strategic kind of a move by Saudis and Russians to cut the production, but I don't think if they can sustain that cut in production for a long time, because it will have a double whammy impact on the demand for oil because the economies are slowing down.
India imports more than 85% of its oil requirements, which make it vulnerable to global oil price fluctuations. The net import bill for oil and gas was $9.8 billion in July 2023. It was $15.8 billion in July 2022. One of the reasons for this drop in import bill could be due to discounted crude imports from Russia. Crude oil imports from Russia rose nearly threefold in the first quarter of this fiscal when compared to the same period of FY23. But crude oil imports from Russia fell by 23.4% month-on-month in August. Maintenance outages at some plants and lower discounts for Russian grades were cited as reasons. So if the crude prices continue to remain inflated for a longer period, India may see a heavier import bill. Experts believe that it may widen the current account deficit or CAD. According to credit rating agency ICRA, for every $10 per barrel increase in price of crude oil, the CAD could widen by 0.14% of GDP. High oil prices also push the US dollar above against its peers. It leads to weakening of the Indian rupee. Last week, the rupee closed at a fresh low of 83.21 against the US dollar, and the head of global foreign exchanges at Jefferies told Reuters that the rupee may shift to 83 to 85 per US dollar if oil prices remain high. Further, fuel and light contributes 6.84% to India's CPI basket. A rise in crude oil prices can push inflation. The International Energy Agency has said that a 10% increase in crude oil prices in India will lead to a 0.9% increase in the country's wholesale price index. So, how will the rising oil prices affect RBI's inflation fight?
RBI higher oil prices do not directly feed into India's economy right now in terms of fuel cost. That is because petrol and diesel prices have been controlled for over a year. LPG price has been arbitrarily reduced by 200 rupees.
We have some kind of a policy cushion when it comes to oil prices, because if you've seen in the last 1 year, India has not adjusted the domestic price. And at the same time, India also has imposed some kind of import tariffs. So if it really worsens further, government can reduce the tariff rates, or oil companies can adjust their profits. So to that extent, you may not transmit the hike in international oil prices to domestic consumers.
The Reserve Bank of India's MPC in its last meeting kept the repo rate unchanged at 6.5%. But it's so far been keeping a hawkish outlook on interest rates. A high inflation caused by a rise in oil prices might force it to increase interest rates. Experts believe that this could lead to high prices and consequent reduction in demand, especially during the upcoming festive season. The election season is also here, and the government may not pass the burden of hiking crude oil to consumers and absorb it instead. It will further increase its subsidy burden. LPG rates have already been slashed by 200 rupees a cylinder. These steps are likely to widen the fiscal deficit. The fiscal deficit for the first 4 months of FY24 has reached 6.05 trillion rupees, which is 33.9% of the FY24 budgetary estimates. So will this jump in crude prices in upcoming elections affect the government's fiscal maths?
Oil companies are making windfall profits, and if the oil price continues to be at 90 plus, the oil companies have to adjust their own profits, and that will also have some impact on the revenues for the government. But having said that, I think the government has made better profits in the last few quarters on the oil companies. Net, in my view, I think the impact of oil price going to 90 on fiscal again would be minimal.
Clearly, a short-term jump in crude prices may have little impact on government finances. But if the prices remain above $90 a barrel for a long time, like a year, it may affect the government exchequer.
But certain items are out of bounds for inflation. They are luxury branded items. Brands across the world have long been a fan of celebrity endorsements. They add their unique touch to a brand's overall narrative. And so when celebrities launch their own brands, especially in the West, they often add their names to it. There's Kylie Jenner's Kylie Cosmetics, Serena Williams' S by Serena, Posh Spice's namesake collection Victoria Beckham, the list goes on. But this is not always the case with Indian celebrities. Even the biggest Indian celebrity powerhouses often skip their own names from their brand mastheads. Why is this the case? Why do Indian celebs not bank frequently on their own names? Ayush Mishra reads the fine print.
In India, we have long celebrated larger-than-life personas, rejoiced in their victories, prayed for them in their challenging moments, and gotten inspired by their lives. Celebrities, on screen, on the field, or on stage, come to signify for their fans certain innate human qualities. Celebrities lend a unique boost to brand narratives when their personas are harnessed through endorsements. No wonder then celebs have remained the darlings of brands in India. You love it when Shah Rukh Khan unveils a car with his arms spread. You pause turning the pages of a magazine to see Deepika Padukone flaunting luxury brand. or trust Sachin Tendulkar when he advocates hand washing on behalf of a personal care brand. But what happens when these celebrities begin their own brands? Indian celebrities, like their Western counterparts, are increasingly branching out into entrepreneurship, launching their own brands across categories. Actor Salman Khan launched the fashion brand Being Human Clothing in 2012 to further his humanitarian works. Priyanka Chopra was in the news earlier this year after her company, Anomaly Hair Care, became the second wealthiest celebrity beauty brand of 2023. Interestingly, most Indian celebrities don't lend their name to the brands they own. While in the West, Kylie Jenner named her beauty line Kylie Cosmetics, and Victoria Beckham calls her ready-to-wear luxury fashion simply Victoria Beckham, one finds Indian celebrities moving away from this trend. Indian celebrity-owned brand names often make subtler references to certain essences or qualities represented by their owners. Thus, you have Virat Kohli's 1-8, which refers to the cricketer's jersey number, or Tiger Shroff's Prowl, a metonymic reference to his name. Given that celebrity names are brands in themselves and their consumer brands are rooted in their own brand value, why not highlight it in the masthead? Here's what veteran brand coach Ambi Parmeshwaran believes.
In India, anything can go legal, and when you go legal, the law takes its own course in India. So maybe they are worried about a lot of that thing happening also. So which is why probably they're not doing it yet. Maybe it will take some time for them to gain confidence to start, giving their full name. Currently, they give an abbreviation of the name, or they say endorsed by so and so, etc. But there is also a lot of backlash against, unlike in the US, in India, I think our celebrities are used across too many products and too many categories, right? So there could also be a worry that if I launch my own brand of, let's say, lipstick or shampoo, my source of income, which is for, endorsing a scooter, endorsing a tire, endorsing a TV, endorsing a mobile phone, all that income may dry up. There could be that fear.
Celebrities also prioritize maintaining a distinction between their personal lives and business ventures. Using names as brands might blur this line. How do the two brands, the celebrity and the celebrity products, support each other's brand narratives?
When a celebrity puts his, her, or their name on a brand masthead, it means this is a forever relationship. When you don't put it on the masthead, when you hide your relationship, it means it's only a business, and I'll run it as a business.
Celebrity-owned brands enjoy the advantage of attracting social conversations, but that strong social presence doesn't always translate into positive brand sentiment or brand longevity. A recent survey by British market research firm YouGov shows that 45% of its respondents do not trust celebrities with any beauty brand endorsements. The biggest reasons for a sour experience were the high price of the products, their poor quality, and misleading information. Celebrity-owned brands also enjoy explosive attention at the time of launch. This excitement tends to taper down over a period of time. What then are the critical challenges for celebrity-owned brands in creating and sustaining their own identities?
There is an issue, which is if I'm a celebrity, I'm endorsing 20 different products with 20 different brand names. And I tomorrow launch my own brand of, let's say, soft drink, or my own brand of cosmetics. Now, any other product which is using me will be a little worried. Like, am I promoting that person? Am I promoting her products? And therefore, how is it going to affect? So there is a flip side to it, which is why I think celebrities are also being very careful, because maybe someone has advised them that if you use your name, let's say launch a range of cosmetics, tomorrow you will not get endorsement deal for shampoo, for soap, for hair oil, for toothpaste, for jewelry, for mobile phone, for shoe, for cola, for fruit juice. All that will go away. Now, that is a big loss.
The divergence in branding strategies between Indian celebrities and their Western counterparts reflects a complex interplay of narratives. The choice of subtler brand names by celebrities can be rooted in factors like possible legal concerns, a separation between identity and business, or possible impact on other brand endorsements. Experts emphasize that even for celebrity-owned brands to thrive, it is imperative that they develop their own unique identity over a period of time.
After luxury goods, let us turn our gaze to items of mass consumption. CPI and WPI numbers will be out in the next few days. In July, headline inflation had shot up to 7.44%. Globally too, firm crude oil prices that had hit the $90 a barrel mark can further aggravate inflation woes for India, which imports nearly 80% of its oil requirement. So how should you navigate the week ahead? What are the key Sensex and Nifty levels you need to keep a tab on? Rex Keno and Harshita Singh bring you a detailed report.
After shedding over 2% each last month, the benchmark Sensex closed the first week of September with strong gains of 1.9% and Nifty at 2%. The gains were pulled in by frontline winners including index heavyweight Larsen & Toubro, power majors NTPC, Power Grid and banking shares. The new week remains crucial for equity markets from a macro perspective, with investors eyeing August consumer and wholesale inflation data both in India and the US. According to a Reuters poll, India's retail inflation due on Tuesday, September 12, is expected to have eased to 7% in August, likely led by cooling vegetable prices from a 15-month high of 7.44% in July. Analysts, however, believe that the market may not react significantly to the inflation data as the higher trajectory has been factored in. Besides, the coming festival season is a key near-term factor that Dalal Street will track for cues on consumer demand.
With the recent resurgence in crude prices, particularly led by interventions done by OPEC economies, inflation will be an event to continuously watch out for. However, we believe the markets may not react significantly given that we already have seen meaningfully higher surprises on this data front. Apart from inflation, market will also take cues on the development on the monsoon on the domestic front, the sustained demand momentum and the upcoming festive season.
That said, ample action is due across global markets as well this week. Investors will be tracking US consumer inflation reading for August is scheduled on Wednesday, September 13. The European Central Bank's rate decision, wholesale inflation data in India and the US, and industrial output and retail sales in China will be watched the following day on September 14. Back home, the headline indices may scale record highs this week.
With momentum clearly in favor of the bulls, the Nifty seems on course to test the 20,000 mark. On its way up, the index may face some resistance around 19,960. On the upside, the index has the potential to rally to 20,400. The bias is likely to remain positive as long as the Nifty holds 19,700. Break of the same could trigger a fall to 19,525. Meanwhile, the Sensex may swing in the range of 65,700 to 67,700 this week.
Today on September 11, the market may see stock-specific reaction to important deals and partnerships announced from the G20 summit.
He's making plans for an early retirement. Business Standard.
Moving on, India has successfully hosted the G20 summit. One of the key outcomes of the meet was the unanimous decision to launch MAHARISHI. This is an acronym for Millets and Other Ancient Grains International Research Initiative. Vasudha Mukherjee sheds light on it.
In yet another shot in the arm for India, which is holding G20 meeting and its effort to popularize millets, the meeting of agricultural chief scientists unanimously decided to launch an initiative called MAHARISHI. Coincidentally, it was the 100th G20 meeting which took place on April 19. This initiative is aimed to bolster research and awareness about agrobiodiversity, food security, and nutrition. It also aligns with the International Year of Millets 2023 program initiated by the United Nations General Assembly. MAHARISHI is a Sanskrit acronym for an initiative proposed by India towards advancing research in the field of millets and other ancient and underutilized grains. The goals of the initiative include enhancing food security and nutrition by facilitating research collaboration on climate-resilient and nutritious grains, strengthening agricultural resilience through approaches like climate-resilient agriculture, digital transformation to promote digitalization in agriculture, embracing technology to modernize and transform agricultural practices, and public-private partnerships to foster collaborations that can help advance research on these grains, identifying research gaps and needs. The initiative's secretariat is based at the Indian Institute of Millets Research (IIMR) in Hyderabad. Prime Minister Narendra Modi has been a vocal advocate for promoting millets, affectionately naming them Shri Anna. Millet-based menus have also been a consistent feature at G20-related events during India's presidency. Meanwhile, spouses of G20 leaders visited the Indian Agricultural Research Institute in West Delhi to enjoy a lunch featuring millet dishes prepared by renowned chefs from across the country. A web platform is also in the works to facilitate communication and information sharing among researchers. Additionally, India has proposed knowledge transfer activities on millets, including capacity building initiatives and international research workshops and conferences to encourage researchers to work on these grains. Although the MAHARISHI acronym was included in the outcome document released after the G20 MAX in April, China raised objections to use a Sanskrit acronym in international documents. China, however, did not object to the proposal itself, instead highlighting a broader linguistic and cultural challenge. China pointed out that Sanskrit was not recognized as an official language by the United Nations.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Earlier, China had raised objections to the use of the Sanskrit phrase Vasudhaiva Kutumbakam in G20 ministerial outcome documents, saying that Sanskrit was not recognized as an official language by the UN. Well, that's all for today. Catch the next episode of the morning show tomorrow. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.